Welcome back to the Money and Wealth Show. I'm Sterling Fox, and our special guest this week is Rick Rule, the founder of Global Resource Investments. Rick, you occasionally have bought companies and frequently act as an intermediary for one company looking to buy another. When it's time to buy a company, let's say a mining company, what do you look for?
Well, whether or not I'm buying an entire company or buying a single share of stock, what I look for is disparity between price and value. The price information is easy to get. You can get it online, you can get it out of a paper, you can get it with a phone call.
Sure.
Discovering intrinsic value requires work. And as a consequence of that, it's the value information that is worth something, and the price information is sort of free. What's the point of knowing the price if you don't have a point of reference with regards to value?
Okay.
The second thing you look for is the ability of the people that you are acquiring it with, or the people who run it, to manage the value, extract the value, beneficiate the value. So the track record of the people who are making latent wealth, which is what resource is until it's beneficiated by humans, active, is a function of people. And you need people who have a track record of success in exactly the activity that you're employing them in now. If somebody has been a success operating a gold mine in the Archean, in French-speaking Quebec, that doesn't equip them to look for copper in Spanish-speaking Peru in the Andes.
Sure.
Although they're both mining, they're very different functions.
Right.
So you look for value, and you look for the human skills to beneficiate that value. The third thing that you look for, because mining and extractive industries generally are capital intensive, extremely cyclical, and very volatile, is you look for bear markets. Because what bear markets really are is sales. Bear markets don't make wealth go away, they just return it to its rightful owner. I know that sounds very cynical, but the truth is, in bear markets, you get good assets at cheap prices with great people. So you look for assets that can be beneficiated, that are cheap. You look for the people that can beneficiate them. And you look for some form of trauma that causes you to be able to buy them at substantial discounts to intrinsic.
Now, before we took our last break, we left on rather a somber note in terms of expectations for the next 5 to 10 years out. Certainly a lot of apocalyptic predictions being bandied around, but I would take then from what you've just told me that these economic downturns, to some with the right perspective and knowing what they're looking for, represent real opportunities.
Absolutely. My reputation, the reputation that I enjoy today, is a function of being prepared both financially and psychologically to take advantage of the deep bear market that occurred in resources in the 1990 to 2002 timeframe. I had the backing of customers who believed in me. I had their capital, I had my own capital, and I had a skill set. 20 years in the market, I came in very aggressively, I bought very aggressively, I bought the best people, and I was rewarded spectacularly. I got paid during the bull market, but I did the work during the bear market. I have done a lot of selling of late. That's no particular secret. My outlook on a going forward basis is not pretty.
Okay.
And I expect that the market will give me at least one more opportunity in my lifetime that is as good or not better than the last bear market. If you don't regard bear markets as sales, you need to find some other area to invest in.
Now, let me pursue that, because we have people email us after every show going, well, gosh, now you've given me another batch of good information, but it just keeps getting piled on top of the other batches of good information you've given me, but what the heck am I going to do? Because the volatility is so high, the uncertainty is skyrocketing, it's a fragile, on a good day, market. Where does the individual look to satisfy his or her investment requirements in these troubled times?
Warren Buffett gave spectacular advice, a lot of spectacular advice, but one that's specific to this. Mr. Buffett said that you shouldn't buy one share of stock if you wouldn't be delighted to see it fall 30 or 40% in price next week so that you could buy more at a discount. That's a really wonderful acid test. A punter who's going to go buy $5,000 worth of amalgamated moose pasture for $1 a share shouldn't do it if he or she wouldn't be delighted to see it fall from $1 to 70 cents. So they could buy a second 5,000 share at a discount. Now, life has given me many opportunities to practice this, and it hasn't always been pleasant. But I would suspect that if viewers of yours disciplined themselves in terms of their purchases to that paradigm, that they would universally do substantially better than they do.
And of course, it seems counterintuitive off the top of your head. You want to buy a stock or an asset of some description that you're comfortable enough to lose 30% of its value tomorrow.
Right. The point is that you have to know these companies. You know, one of the great sadnesses I have as a broker is that people will transfer in these large laundry lists of stocks, and they'll have 50 or 60 stocks.
Yes.
And you know, I'll say, okay, let's go through your stocks. And the first one is Amalgamated Aardvark, right? That's 2 A's. And they'll say, well, what do you think about him? What do you think about Aardvark? And I say, well, I don't think about it at all. What do you think about it? Well, I don't know. Well, if you don't know, why do you own it? If you don't know about it, why do you own it? Well, so and so recommended it to me. I subscribed to his letter. Do you still subscribe to the letter? No.
But
well,
you're
why
still
do you
holding
own it?
the stock, right?
You should sell it. No. Oh, well, I can't sell it, Mr. Rule. Why can't you? I paid $5 for it, and it's selling for 50 cents now. And if I sell it, I'll lose $4.50. And I have to say, no, you've already lost.
You've already
$4.50.
lost $4.50.
The question is, what are you going to do with the 50 cents?
Right.
If you don't know enough about Aardvark to know what it's worth, why is it worth 50 cents to you? And the point of the Buffett soliloquy is simply that people need to know more about the companies that they invest in. They need to pay more attention to fundamentals, more attention to value, and less attention to price.
And would you recommend, again, based on decades of experience, that the less an individual does on his or her own, minus the input of a seasoned, capable financial professional, the more trouble that individual is looking for?
I wouldn't agree with that.
Okay.
Because I think the supply of seasoned, capable, honest professionals is very small. I am a money manager, and I believe that people should manage their own money. But if people are not going to manage their own money, then they need a professional. People need to manage their professionals as well as they manage the stock. If you're not going to manage your portfolio, you better manage your manager.
Right, right.
There's no substitute for not doing one or the other.
And the tendency is, well, here's this incredibly capable person, there's my money, I'll check with you in a year.
Without even knowing if that person is particularly capable.
Right, right.
People give money to managers that they have not, that they don't know well enough. The same thing that people do with stocks.
Rick, we're fresh out of time. I thank you for yours. You've provided, hopefully, to our viewers, and we'll find out with their emails soon, some interesting and provocative investment advice. We thank you for your time. It's great to meet you. We
Always
appreciate
a pleasure.
it.
Always a pleasure.
We'll be right back.
Good afternoon. My name is Larry Ray. I'm the chairman and CEO of Molycorp Gold Corp. As the name states, we do have a deposit we're developing in British Columbia, which is a pure molybdenum deposit. But our focus these days is on magnesium in Nevada. Through serendipity, we discovered a large deposit of magnesium running about 10% with a high purity and consists of about 256 million tonnes at this time, 52 billion pounds. Our main emphasis is to move this project forward by beginning a drill program later this year in which we can increase the integrity of the resources into the indicated and inferred, as well as increase the resource itself. For further information, please visit our website at molycorp.com or phone us at 604-531-9639.
Tax Tips with David Ingram.
You bought yourself a car in the States, you're going to bring it back to Canada. Most of the U.S. border points have to have the paperwork 3 days in advance, and it's 3 working days, so Saturday and Sunday don't count, or holidays don't count. Get your copy of the title of that car to the U.S. border point where you intend to take the car out of the country. Car has to go through U.S. Customs and get exported before you can bring it into Canada. If not, minimum fine $500 and a whole bunch of stupid paperwork. That's a tip.
And that's our program for this week. Our thanks to David Ingram and to our special guest, Rick Rule. And thank you for joining us. If you have some thoughts about today's show that you'd like to share with us, please send them along to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.